With the exception of maybe a bit of a hitch last week, right? Markets are now flying. S&P 6,100, NASDAQ up above 20,000. Tariffs, they seem to have been delayed, but I mean, they're going to be coming at some stage.
Well, yeah, that's right. It's interesting to see even that Canada and Mexico have been posting gains this year and several days in a row. So really the market, I think, looked at a lot of policy cross currents here: tariffs, immigration, deportation, energy production, AI investment. And there's even division within the administration ranks. So not only are there a lot of issues, but then there's questions about which direction they'll go. So each of these have pros and cons. I think there were fewer cons than expected, most notably on tariffs, and that helped to lift the market. What's leading the market, though, is interesting. It's not tech, it's energy. Trump is keen to lock in some long-term energy deals, and that means more U.S. production. But you only get that production when prices are around $84 or higher. That's according to the Kansas City Federal Reserve's estimate of where prices need to be to get that new production, and that's a lot higher than where they are now. So that's really helping to lift the energy sector on the outlook for higher prices and more production.
Yeah, we're still about $4 or $5 away from that level, right, on Brent, at least, Jeff. So here's the thing, in terms of valuation, right, in the market being expensive, we keep hearing this, but more specifically, some folks, I don't know whether it's all over the place, but it is out there. Some folks are focusing on what's known as the Shiller-Cape ratio, right? This is smoothed out over 10 years. And at 37, that's not just sky high. That's probably higher than it was in 1929 before the big bust, and also higher than back in 1989. Does that concern you, or how important or relevant is that metric?
I think it's important on a relative basis, but maybe not in an absolute sense. Look, U.S. stocks are pricey. There's no, whether you look at the current PE ratio or on forward earnings or on the cyclically adjusted basis, they're very high, but there's a big gap between tech valuations and the rest of the market. And I think that's where we could see a second wind here. The market doesn't have to be only led by the tech sector. We can see areas with lower than average valuations, or average valuations that are well below what we're seeing in the tech sector, like financials, like energy, like materials, beginning to lead the market. And that could give us still a strong performance this year, despite maybe those higher valued areas of the market, maybe a little bit more disappointing than they've been in recent years.
Just circling back to what you were saying about energy leading this market to higher now, that's sort of an unusual situation, and I think at least some of this is linked to what President Trump was talking about yesterday, the whole Stargate project, right? I mean, beyond the sexy part, the AI and curing cancer, et cetera, folks, including Schwab, by the way, have been looking at, how are you going to power this, right? And that's going to mean energy. Are you agreed that at least initially the power needs are going to be met by not clean energy, but it's got to be coal, it's got to be natural gas before we even get to nuclear?
Yeah, I mean, it's probably all of the above, but certainly the easiest things to do are to begin to extract more natural gas and petroleum products. And so there's talk about, this 333 program and getting, 3 million barrels per day increasing in terms of production. So, yeah, that's some portion of where it's going to come from. But we know that a lot of these big AI companies, AI-related companies, are really focused on nuclear and a lot of different sources of power. So it's going to need to be all of the above. And it's one of the reasons why you're not seeing just one area of energy or even utilities doing well. It's really across the board as greater volumes. There's talk about AI, the incredible increase in computational power and electricity demand is really something that is on the scale where everything needs to be involved in order to meet those demand needs, because it's going to be huge.